The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Had a little bit of a run in the S&Ps yesterday. There's no doubt about that. Got some bank stocks, this week reporting some quarterly earnings. The Bank of America's of the world, the J.P. Morgan's, the Goldman Sachs, the Wells Fargo's. We're going to get into that. The Greece thing is still out there. Just, to me, that situation, it's going to end ugly. There's no payments coming. I mean, and then what do you do? I mean, you got somebody that owes you a bunch of money. What do? You put them to work? I mean, what do you try to get them to work it off? I mean, I don't even know how this, pans out. But to be honest with you, Greece is kind of an anomaly. It could be a shape of things to come. Obviously, we've talked about this a lot with the Spains and Italies of the world, but at least they have some kind of viable work ethic and some form of an economy. It's literally, paint the fence. Exactly. That's kind of what I'm thinking. But, you baby somebody to death, seemingly like their population's been franchised, I guess. How do you turn that around? It takes almost a generation of being pissed off to turn that around. So, that's an ugly situation. Thank God it's somewhat localized, and those people are going to have to come to grips with what it's like to get back to work and put their heads down. That's the bottom line. So, interesting little situation there. Let's take a look at, I say little situation, it's not a little situation. Let's take a look at the euro based on that alone. We talked about some targets down below this 109.82. Well, why is that the case? There's, that was not really interested on buying the dips on this thing, but again, that proved to be a nice little target-rich environment down there on the euro, just to kind of sit tight. And we also talked about the weekly unfair lows in the same neighborhood. Here we go. Don't have a lot of faith that this is going to be a tremendous bounce off this inflection point. So, actually, Al, are we okay? We're okay, I hope. I just read your comments. When it comes to the euro, I'm just not a fan of buying any type of support. There is no support, in my opinion. So therefore, we look for resistance. And recently, selling off that 112.25 and then getting some better conviction below 111.46. That's the way that works. So right now, what do you do with the euro? You're sitting here waiting patiently, unless you want to kind of deal with some of these shorter term inflection points, which I'm, again, partial to the longer term and intermediate term. You've got 110.34 sitting in your face here. A little bit of a chance to sell here, but again, this is a very thin profile. These types of profiles, as they extend out, if they extend out, usually are kind of treated like walls. So it's like one side of the wall, the other side of the wall. You don't really necessarily want to trade inside the box on these types of profiles when they're outputted. When you get wider profiles, in fact, some of the automated systems we have, see that, see this, see this. These are kind of trade inside the box opportunities. This is a trade outside the box opportunity. And guess what? The bottom of this 240 profile kind of lends credence to that daily and weekly. So I'm just kind of sitting tight here. I think we could rally even a little bit more in the euro. So, would love to see it at least get back into 110.80 if I'm going to play that sell resistance game again. And obviously breaking down below 109.50, that general area. So, we talked about this before. Is everything in Greece painted white? Every building? It's just weird, man. Every time I watch the news, these people are squinting their eyes. Everything's so damn bright, and then the buildings reflect off that sun. It's just, I can't stop talking about Greece. I'm sorry. Let's take a look at the S&Ps. This is one we talked yesterday about. We kind of crossed the 2075 border in the show. I think we were right in here during the show, like we were trading about 2080, 2085, something like that. And we said, you know what? Now you got to sit tight. You're in no man's land. We could float up on Ether or come back down. And what else is there to do to go up then come down? I was kind of like the guy on Hotels.com, Captain Obvious. That's what I'm going to start calling myself sometimes. You got 2091 we talked about up top, 2092 rounded off, excuse me. So yesterday we got into that area, and I'm going to just kind of go to the 60-minute here for a second. That's the first, there it is. There's where we got into that 2091, 2092 area. So right there, I'm just showing you in a short-term time frame so we can see the action. We came off, but, I'm not going to hang my hat on that. Powered through. Right now, again, I was, like we've been talking about, not actually being in these indices or heavy leveraged overnight at the very least, not heavy leveraged overnight at the very least. You wake up this morning and you're like, okay, let's get back down below 2092. It will be awesome to get back down below and then go retest it, but that's not happening right now. Let's just let the market open. We had a massive day up. If we sit here and rattle around the next couple of days around this inflection point, and especially kind of close above it all the time on the daily, that's not going to bode well for my short stance. So right now, how do you play the S&Ps? I think you got to wait until we get below 2091 to 2092. And how do we kind of work in tandem with the scanner? Let's just pull up the scanner and let's look at our breadth indicators really quick. Let me get this thing started. I got a couple of mice over here that are turning the wheel. I'm gonna wait until this pops up, and we're gonna get into some of these bank stocks in just a second. I'm real interested in this sector. Want to look at and let me see what's going on here with the scanner. Finally got it up. Here we go. Daily. Let's go to our daily, and let's just see the kind of world the worm has turned recently on the intermediates here. But let's take a look at the S&P. So now, looking at our breadth speedometers, yesterday we were able to close positive, and in the middle of the day kind of turn positive on the daily. Weekly still not the big cooperating mechanism here, which I look to. Little mixed up right now. So what do you do? So again, weekly still negative. Here's our weekly chart. We're up on basically all-time highs neighborhood. But again, with the discord going on in the two intermediate and, daily and weekly, I'm still looking for areas to sell, right? And now we've caught some good moves off this. We've gotten stopped out. This is a great example of just trading 101. Small losses, let the profits ride. That's easy to say and hard to do sometimes. I understand that. But you've gotten back into a major inflection point now that you can start looking at, can I pick a battle here? Can I maybe make some points off of this? Again, I'm not interested in going long up here, and a lot of people are thinking that. We had a big day. A lot of people don't believe the market should go higher. You're going to have some of that short selling and covering. Watch out for that type of action, and if this thing consolidates, like I said, around here, this general area, that's the type of action, continuation action, and we'll get some more shorts out of the marketplace. But we want to see, again, the breach back down below 2092 and just kind of try to play that game a little bit there on the short side. Shanghai, we talked about this one. Probably going to get back as a retest into this 4,200 area. There's the 4,200 area. Hasn't happened. That's what you want to see to start looking at the Shanghai from the short side again. But remember, we've got the government intervention. That's worth a 20% move probably. Well, actually, let's see what it is. 12. Good Lord. That would be a 33% move from the bottom back up into that inflection point, 4,200. So, again, that's kind of what we're looking at on the Shanghai. We're waiting patiently on that. This is kind of a no trade right now. Who knows what's going to happen? they can announce things overnight. And I think they've done a good job of plugging the hole there. I just got to, give them quarter on that. Yes, I did get my impacted tooth pulled. Actually, it was 2 of them. And it's amazing how that clears the air. If you've never had a tooth that's impacted, go try it. It'll give you a version of what hell might be. Unbelievable. I don't, just thinking very clear this morning. Let's take a look at the 10-year. Okay, so again, this is the daily situation, 125.13. Talked about that being a, possible bounce point. And I'm a bigger fan of going long treasuries than short treasuries still, believe it or not. So that's a pick about a long area with stops down below 125.13 on that. So that's kind of why we're looking at that way. We finally got it back down into a resting point. Now you might say, well, what about that previous inflection point, 125.24? Remember, new profiles appear. You got to, kind of readjust your thinking, and you're thinking based on a new, wider profile with a better support area here. And I'm looking at this navigator here too. We've kind of, we could have a little bit of a pop here. So, so that's the way I'm looking at the 10-year. Let's take a look at a couple other things right quick before we go to break. Gold, just, man, what a my 240 charts here on gold are messed up. So that's coming from E-Signal. Nothing to do here. Just really terrible situation for the longs. Had plenty of chances to rally, just didn't happen. Here's silver on the September contract. Here's that move yesterday up at right, literally to the tick up into 1592.919, reached a high of 1590. So again, that's having your orders resting around these inflection points based on how you want to trade this is not a bad thing. Here's the 1585. This is kind of a perfect paint the chart properly, close below, go back and retest. This is also looking extremely bearish. Just nothing to write home about any type of bottom fishing there. Let's also take a look at Japanese yen. Again, this is my favorite trade. If you guys watch this show, I love it. I'd love to get a retest back down here, which seemingly we're getting. First stop around 123.39. Let's take a look at 123.06. So the 240 regulation trade. We'll be right back. I hear the music. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Here's crude oil. Had a question about that. Here's the daily. We talked about, again, I believe 2 days ago, we talked about this orange bar appearing, new profile attempting to appear. We might have a little bit of a rest period here on the way down. Talked about some targets from 51.49. Maybe this thing would rattle around, complete the fair auction up top, possibly give all these folks that are very bearish on TV and, you know, oil's going to race for the lows again, a little bit of a scare on the upside, and that's where we kind of sit there and come on up to this inflection point, 54.22. I don't think you can do a lot right now. You've got a POC. If you got to get short right now, you've got a POC there. That's kind of the top of the hill. Remember, you fall down one side, you fall down the other. And we're looking relatively bearish without question. I mean, here's the weekly. But it would be ultra cool to break down and close below 51.49 to really get some conviction, or rally up into 54.22. And right now we're just kind of swimming around here. Don't see the big time leverage on trading crude oil right now, unfortunately. I know that's not what you guys don't want to hear. I mean, the thing that I would just kind of say is, if you're trading longs against 51.49, that's a contra trading. It's a long-term trend down, and you know, make sure you got your stops in. I'm not a big fan of going long this product right now. Okay, let's take a look at let's take a look first at the XLF. Some things I want to try to cover before this show evaporates. Here we go. God, I hate this thing. I was talking about trying to let this thing get back down below 24.50. Didn't happen. Very strong ETF. And now we've kind of even surpassed the 2486. So this is the ETF in general is off the radar screen. We talked about trying to find weak stocks in the XLF the other day to try to sell. If the theory on relative strength trading, you guys know this by now. It's if you're going to have a sector or an index that you feel is going to come down, you want to try to find weak stocks to sell, and therefore if you're wrong, those weak stocks hopefully won't hurt as bad if they rally. We're going to take a look at we're going to take a look at Weyerhaeuser here. This is one of the glaring weak stocks it was in my opinion glaringly weak. So 3150 again hasn't rallied that much. Again, this is an XLF stock that the scanner picked out as something weak, and we've gotten above that 3149 on the daily and the weekly. We kind of need to sit tight here. That's a little bit of I would call it just a noise factor. I don't mind staying in this stock based on a little bit of noise happening around that inflection point, but this is the type of situation, just very good case in point. XLF rallies like crazy. Weyerhaeuser can't get out of its way. If the market turns south, and especially if the XLF turns south, this thing could come apart pretty quickly. So that's the situation on Weyerhaeuser, and that was one of the picks off the scanner. Going to go into the scanner here, just look at the ETF, the XLF. There we go. It's turned positive breath on the daily and the weekly. But, looking at some Aflac was one we had on the radar screen. AFL, let's take a look at that. This is right off the scanner. Again, really has just got back into, with that massive rally, back into that unfair lows on the weekly and daily, 61.86 and 61.63. Those numbers are coming right off the scanner. There they are. 61.86 and 61.63, that very tight DMZ there. As you can see, an underperforming situation, just as Franklin Resources, and you got the leverage points there, 49.99 and 50. See how that works? 49.99 bottom, 50 bottom. We're not close to that bottom. This is one, Allstate showing signs. Weekly, new boxes attempting to appear. ALL, let's take a look at that one. ALL. All right, a little bit of a jump there. We're going to wait and see on ALL. No new profile appearing this week. It will appear next week. So we're going to opt out on that one. Let's go into Franklin Resources, BEN. And we're going to take a look at this when we get back, folks. Wow. Ugly situation there. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose.
If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're taking a look at Franklin Resources. We were trying to focus on where were you? XLF stocks that were showing weakness. Here's the situation on Franklin. You know, this is what you love to see. You love to see a stock that every time people try to get into it and buy a dip, it's just met with sellers. All right, so 50's the lid on this thing on the weekly, and by the way, 50's the lid, 49.99 is the lid on the daily. New inflection points there this past, actually last week. So again, you know, you're trying to find stocks that are not cooperating with an XLF that continues to kind of either spin sideways or go up. And I've personally thought the XLF might have a chance to come down. That's not going to be the case right now. We're above inflection points we can't ignore. So great example of a stock that might not have hurt that bad, trying to get a little bit of a short scene off in general. So let me check my messages here. Here we go. So another one, let's take a look at the scanner again. Let's just come up and try to define a couple of things that are not exactly acting right here in case we have a market pullback. There's not a lot of XLF stocks that are general growth properties. Let's just take a look at this one. This one's interesting because we're sitting at the top of a daily GGP, and here we go. So pretty far below weeklies, and that's what that deep red means, and those are the inflection points. But we're at 26.25 top. So let's take a look at GGP, so you guys can see the chart here. doing a webinar tomorrow night with Tom, 5:30 to whenever. I think they've got it slated for 6:30, but there's absolutely no way, in my opinion, we can cover, what this particular scanner provides in that short amount of time. So you guys are welcome to join us. Just get a demo of the scanner, and you'll also get 14 days in the Tiger's Den if you sign up. Here's the situation on GGP, General Growth Properties. Again, that orange bar the orange bar this week looking as if we may have a new profile appear, new inflection points. We're sitting at the top of a box. You know what? Market's continuing to move up. The past couple of days, this thing's showing bad connotations, just consolidating as the market's moved super higher the past 2 or 3 days. To me, it looks like we're going to revisit 25.75 and even lower. So this is one off of the XLF, and the only thing that concerns me a little bit here is, and if you look at the navigator, we're crossing zero here at the same time. The market's just kind of doing its ether move up right now. I don't know if there's a lot of value to that in general, market being the index itself. But the only thing that's concerning is we've got a new kind of demand area that's possibly going to appear. That may disappear, but that will be the only thing that would cause any form of temporary support on the long term on GGP. So again, we'll be covering those concepts tomorrow night. Leg Mason, wow. Lowe's Corp. This is one that we've kind of had on the radar screen for a while. L and LM. Let's take a look at those. L. And again, it seems like we're always looking for, if you watch this show, we've been looking for short opportunities and not necessarily long opportunities all the time. That's because, we've tried to play the game of, the market coming down, and we thought and thought the market was going to come down. And we've had some pullbacks, and we've had some good, situations on weak stocks that have pulled back. But we've also talked about lately a couple of longs, actually some of them being the bank stocks, the GS, the JP Morgan. I'll show you those and why we looked at those. And on passing on the shorts on those, we didn't necessarily talk about going long, but we talked about leaving those alone for a while. Here's Lowe's Corp. This is one to just sit tight and wait on, even though it's a weak stock in a financial sector. Got a new orange bar on this one appearing. We may have some new inflection points to sell. We're kind of like in the hole down here. Nothing to really hang on to. So this is one we're just going to have to wait and see. But let's take a look at the converse of what we've been talking about. We talked about, picked up Goldman Sachs the other day because on the scanner, we did a sort where we were looking for bottom, or, stocks that were pulling back on this market pulling back and, sitting at inflection points. So this is what we did. We did a weekly bottom, and it picked Goldman Sachs out, actually, and a couple other stocks that I've got written down that we're going to kind of reference. But we talked about, is this a stock to be shorting? No, I mean, market's kind of pulled, it's pulled back. It's sitting on major support, 204. Right there, we were on the daily, what was this, a couple of days ago when I did Tom's show, right down in there. But, is this showing weakness on the daily? Yeah, but, we're coming into that weekly takes precedence over daily over 240 down the line. And that inflection point on the weekly, we talked about, if you're going to try to find some longs, here's one, stops down below. It's definitely not the one to short. So we've had about a 3% rally in the stock since we looked at it, from 204 to 210. And this morning, and we're trading about 210. Let's take a look at JP Morgan. Again, we talked about Teflon Jamie P. Morgan. A little bit of reversal off the news this morning, 68.05. So got into this inflection point above 68.39. We've come off, but the other day we were looking at this right there, same as Goldman Sachs last week doing Tom's show. We were like, you know what? There's better shorts out there, especially in the XLF. If you're going to try to go long, these are the type of stocks you've gotten into major support. And the scanner, what we did is we went on the scanner and we did a little bit of a sort here. I'm in the XLF and we did bottom. And it was sitting right here. All right, so we can kind of take a look at this, and just like we look at Comerica today, CMA, bottom, top. All right, so let's take a look at CMA. It's just giving you trading opportunities, stocks that are sitting on high probability areas. All right, so what do you do with CMA, considering that that was showing what it showed? Okay, so this is a nice little situation. All right, so we've closed below. We kind of rallied back. We haven't done much this week of all weeks, sitting right there at that 50 level, not wanting to go above. And we've also rallied all the way back up into that daily unfair high. So this, to me, getting back, we've got the weekly as the stop-oriented situation there. As you can see, we've rallied back up. We're above profiles here. And I know that, profiles below price action are relatively bullish. But remember, the overhanging nice little feature of this setup is 50.07 is sitting there, stops above, and we could come back and revisit the entire fair auction down to 48.16. This would be not a long-term play, but something to pay attention to if you're looking to get some short-term wins on the board, so to speak. This might not be a bad little situation. Okay. So we kind of jumped around a little bit here, staying in the XLF, though. Let's resort this, and let's just kind of look down the list like we were before. And we had a couple of Leg Mason, LM. Let's just take a look at that one. And here we go. All right, that's ugly. But how do you trade it? So here we go. Really unbelievably showed its hand yesterday, but and a little bit of scary thing is maybe some new inflection points here. I'd love to see the whole profile appear above, but this one should be on your radar screen for shorting because, man, it's just in the XLF, which has shown itself to be strong. The market's rallied significantly. This thing cannot get out of its own way, and it's actually unchanged from last week. So you might want to look at this with inflection points around 50. If we can get back up there, this is the kind of the latest inflection point to pay attention to on the 240 guidance system, if you will. This one should not be along at bare minimum. If you've got Leg Mason in your long-term portfolio, you might want to look at buying some insurance, actually. Here's the situation on MMC. Actually, let's do this. Let's go back to the broad marketplace. Let's find some really cool opportunities for today. How about that? Let's get out of the XLF. We talked about that enough. Let's take a look at the S&Ps. Let's go back into the S&Ps, and let's find stocks that actually were showing below profiles yesterday for the first day. All right, so Aflac, we've talked about that. And the theory here is on a day like yesterday, we want to find the number one, which is we showed our hand early. We caved in, even on a day like yesterday, below profile. So Anthem, ANTM. Let's find another one. Cigna, CI. I want to take a look at that because we're actually kind of up on the weekly there, green. Let me just do only matching results here. Actually, let me do this. Let me do above the box on a weekly, below the box. Okay, so these are the ones that are just starting to break stride. Cigna, Aetna, and let's take a look at those. CI. Okay, so this is really cool, actually. Man, what a strong stock. Not a big fan of going against the grain on this level. Again, profile's well below here, but starting to show some hints of breakdowns. Again, had that early little sign, and then this is on a relative strength basis. Lower highs, higher highs in the S&Ps, lower highs on this. Got a little bit of an opportunity here. I mean, this is a $155 stock pre-market. We're trading 155.20. It's going to be a little bit, to say the least, concentrate against the long-term trend up. There's probably better shorts out there, but interesting little situation. Might be able to pick up 5 or 10 points off of Cigna on the downside here. But again, that's a high risk trade. Let me repeat that. That's a high risk trade. Here's Aetna. All right, so the reason we picked this out on the scanner, we wanted to find a stock that was kind of in an uptrend, but starting to show hints of breakdowns. Even as of yesterday, there's only 4 candidates like that. Here's one that, remember, weekly takes precedence over daily on down the line, and this is one that's sitting on a major inflection point, but doesn't seem to want to get off of it. And obviously, there's some, the takeover merger situation on Aetna. We're sitting on support in the long term, even though we broke down on the daily a little bit. I wouldn't. This is not one I would look at on the short side, so we're going to pass on that. Let's take a look at something else. Adobe Systems, PFG. Every time I think of the 3 letters PFG, you guys who trade futures know exactly what I'm thinking of. If anybody can type it in the den in 10 seconds, I'll do something for you. PFG. What do those 3 letters stand for in the futures world? Yeah, I'm sorry. Larry. Let's move on. I understand what you're talking about. That guy, did you know that guy, Russ Wasendorf? Did you know him? Did you ever talk to him? Guy was generally full of himself. Yeah, okay. Yeah. I didn't see that one coming. I saw a guy with a big ego. Yeah. Yeah. Okay. Let's talk about stocks. Kind of wrecked that town too in Iowa. Sorry about that, Larry. We'll definitely move on. Yeah, that's an ugly situation. Isn't that Nadex uses their old platform, right? Didn't Nadex adopt that? They were in talks with PFG. Yeah. Sorry, Larry. I'm being serious. We're going to move on this time. Let's take a look at a couple of the stocks that we looked at the other day. FOSL. This is one that we looked at because of the weakness, the relative weakness. And this is a good also situation where stops are in order. Fossil group, I mean, that, rising tides lift all boats theory. I think this is still a great opportunity on the short side. I'd actually like to see it now rally back up into 75, 73. That will be your next kind of big time resistance area on this. But right now, you've gotten above the weekly 70.34. You've kind of breached the daily. I'd like to see it get at least back down below 70.34 to start picking at this on the short side again. This particular company's got some fundamental issues. It's being reflected in the stock price, and I think this stock could ultimately get back in the 50 range, bare minimum. All right, that was one the scanner picked out the other day. GPS, let's take a look at this one. And we're going to start hearing the music here pretty quickly, and we're going to have to go to break. But this is really cool how this is acting. We got back into those weekly unfair lows, and I like this stock. It's a short still. I hope the market can ultimately help it go down. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're looking at Gap. Incorporated GPS. This is one we just talked about, stops above 37.88. I love how this thing has really showed its hand lately. Remember, guys, things in their lows go lower, things in their highs go higher. Just remember, it's not on sale if it's down. Sometimes it can be on sale, but in this case, the company's got some issues, and obviously not having that high beta being dragged up by the market in general. Let's retake a look at the S&Ps really quick for guys who are catching us late. My theory on this is, since we've still got, and again, we haven't, I'm going to get rid of that sort, go back to our index grid and take a look at our breadth indicators on all these time frames. Now, if you go into the S&Ps, you just look here, you can see that the 60s and the 240s are very, very strong. The dailies have just started eking themselves in positive territory as of yesterday's close. The weeklies, you know, this is basically saying that the broad marketplace, there's still a disconnect on the long-term basis. And I know a lot of stocks have rallied, and we're going to try to cover as much of this concept as we can, how to interconnect all these things tomorrow night at 5:30. But the theory today is, we're still going to try to bank some shorts off this 2092 area and down below. We talked yesterday about waiting patiently until we got to that area. You know, we've gotten through the overnight possible nightmares of this thing gapping up another 20 points. So 2092 is going to be the fence, to sum it up, and we're looking for some lower prices here. If we consolidate around here and just are very noisy around 2092 the next couple of days, we're going to have to take that for what it's worth. We're going to have to look towards our breadth indicator to see where the broad market internals are on relative to profiles, and we're going to have to, possibly just take that for what it's worth, that may be a continuation pattern right now, and we may have to kind of, keep the powder dry for a little while, as they say. Let's take a look at the U.S. dollar. Get that screen out of the way. U.S. dollar, we talked about a little bit of a target-rich environment up top here around 96, 93. That was met, overshot a little bit. Coming down this morning, what do you do with it now? You're right in the middle of a fair auction. We crossed all the borders we needed to cross going north, 95.30, and then that 95.89 area. But, we've pulled back. This is our short-term 240s. We pulled back pretty much to the tick to support here on the short term. So I'm still a big fan of going long the U.S. dollar. Stops below short-term trading on below 96.33. That's the way I'm looking at the dollar. And that's the story on that one. Let's take a look at soybeans, new crop. And I got kind of caught with my pants down on this one. Didn't really catch a lot of these longs. Weather situations, the floods. Here's where we're at now. 1040, this is on November beans. We're going to take a look at this. This is obviously recent highs. We kind of slipped above there already today to just stop some folks out. That's going to be a little bit of a barrier to get through. Here's the long-term weekly. So remember, the worm is turned on this, and we're in a big, massive fair auction here with a range from 961 up into 1040. That is huge. So we could get some bouncing around within this fair auction now. Here's the short-term numbers, 1027, 1007. What does this all mean? This means that I think you just got to sit tight on beans right now. And if you're going to trade these short-term numbers, those are the inflection points to pay attention to. Guys, stay tuned for Larry Pesavento. If you've never watched him, he's awesome. And I'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.